Hi guys, this is Imran from Options Insight. Due to the incredible interest that I've had from people asking me about crypto options, once I've told them I've become active in the space, I thought it made sense to start making videos about crypto and crypto options specifically. Now, I'm not a blockchain or crypto expert, but what I am is an options expert. And since June, I've been trading Bitcoin and Ethereum options with my own cash, and I've managed to 5x it. I've also managed to do that in a way where my risk was super controlled and I wasn't going to lose a hell of a load of money. So the idea of these videos in this new series, which I'm going to call Crypto Insight, is to talk you guys through some of the strategies and ways that I'm trading crypto options and taking advantage of my knowledge of trading volatility, term structure, skew, and being able to manipulate those positions to give myself some edge and give myself some advantage in the way that I express my views to participate in these crazy wild swings that crypto markets can have. Being a vol trader, I'll tell you now, the most exciting and the most fun assets to trade, volatility, are the ones that know how to move. And right now, there's no other asset class that knows how to move like crypto. So with that, I hope you enjoy this video. Please subscribe to the channel if you like this content, and feel free to sign up for a free trial to Macro Insight, where you'll get this type of content. You'll also get other asset classes, and you'll get live Q&A.
So let's crypto markets. Finally, they pulled back. So what had I been saying last week, right? I've been saying, so on technicals, we were showing a bit of momentum divergence, right? So we had the old dailies, weeklies showing higher prices, but not on as high momentum as we had seen. Okay, so that's one sort of red flag. Okay, then you had another one that was very, very positive news flow, but price is not accelerating to the upside, right? In any fast way, basically, right? So slowing momentum on the upside in the face of extremely positive news flow. And you look at like some of the Google searches. So I checked the Google search trends, and it was like the levels were levels not seen since 2017. So they weren't as high as the peak of 2017, but they were in that sort of order of magnitude, basically, right? So, you know, a bit of frothiness when you see that level of kind of search activity, everyone talking about Bitcoin. Literally, I don't think I could talk to anyone without them mentioning Bitcoin for about the last 2 weeks. So that does make you think it was a bit frothy. And then the thing that I mentioned last week was the upside vol is just getting killed, even though we're breaking out to new highs, right? And that is not something we had typically seen in Bitcoin vol and Bitcoin options, right? So that was making me wonder, you know, is that a sign that we're getting exhausted, that there's just no panic to the upside as we're making new highs? And does that make a correction more likely? And that was kind of what I was questioning. And I guess that's how that played out, basically. And maybe it did end up being a bit of a sign of that, right? So those are the three sort of ingredients of what made me get cautious. What did I do with my positions? I had some call ratios on in February. I rolled them up to those call ladders. So I took money off the table. I rolled those up to try. I did that a bit early, right? I did that when the market was at 50,000. But I'm kind of glad I did it, because it just kind of it cemented that profit and allowed me to still have upside if we end this week. I think they expire on the 26th, right? So if we end this week above 54,000, then I'll still cash in on a bit of cash, but my money at risk went down dramatically. So that was the speculative long. That's what I did with that. In terms of the core equity position in Bitcoin, I put some risk reversals around that, right? So I had some March 40s, I had some March 48,000s puts. And so I was buying those before the sell-off. But then after the sell-off, I stuck in an offer and some calls. And then when the market rallied yesterday, those got filled. So now I've ended up with a bit of a risk reversal where I'm short one call and I'm long two puts. I'm just long two puts to be a bit opportunistic, because I think that, you know, the thing's got some weakness in it still, maybe. And then I'm going to get back to just one by one, basically, and have that risk reversal sitting around my exposure. But the idea is I've got a short call at 72,000, which basically I'm happy to let a bit of my Bitcoin go up at 72,000 by the end of March, right? No worries there. And then if the market does come down and sort of test that 42 area, which is, I think, is a major support area. So if you look at these support levels, right? 48 at first support, that kind of held yesterday, didn't manage to hold today. Then we got down to that 45 support. Now we're kind of what we're chopping around between the two, right? 45 and 48. And then below that is 42 and a half. So for me, 42 and a half is big because that was the old high, right? And it's also a fib confluence, right? So for me, that is a level that needs to hold, okay? And probably will hold on the first test, right? But if we go down there, then I'll be probably doing something with my risk reversal, right? I'll probably be buying back my calls because I would have sold those calls for like 2.5K. I'll be buying them back for maybe 500 or something. And the puts that I own, because I own the 48 puts and the 4,000 puts, I'll either just take my 48 puts off or I'll roll them down lower basically to just like maintain some of that downside protection, but I'll extract some money out of those. So for me, that level 42 is a big level to do some stuff on, right? Do some restructuring of my hedge basically. But that's kind of how I'm running it. I didn't really get any hedge on Ethereum. With Ethereum, it's just like, it's going to move like a beast. You just got to close your eyes and deal with it basically, right? As in accept the volatility, have an amount of money that you're comfortable, that you don't need anytime soon, and just ride the wave. Because that thing, if it does work and it does take off, I mean, it goes way through 5,000 at some point, right? So that's kind of how I'm looking at it. So I'm not really bothering hedging that much, whereas I'm kind of hedging Bitcoin a little bit more actively, right? And it's also a bit more liquid. Like when the markets get really gappy and violent, it's a bit easier to trade Bitcoin options than it is Ethereum options, I think. All right. So that's kind of what I've been up to. This is obviously a bit of a liquidation event, right? What happened? Yeah, it doesn't do anything for ages, and then it just drops by 30% in one go, right? That's kind of typical of what Bitcoin does, and you've just got to, being aware of that, you've got to manage your position so you're not in the liquidated camp, right? Part of the reason why it has these moves is because so many people over lever themselves, and then they just get stopped out of all their positions at a price that they don't want to sell, but they have to sell. Right, price goes there not because people want to sell, but it's because they have to sell, right? So lots of liquidations across multiple exchanges. Kraken, apparently Ethereum went down to 700 on Kraken, which is ridiculous, right? So clearly there's some pain there, a lot of pain across the street in crypto. But just be careful, right? Be careful about how you size. Be careful the amount of leverage you're taking. In fact, I don't really recommend taking leverage, right? Just kind of accumulate that exposure through clips of money that you can afford to just write off for a long period of time, right? That's a much easier and safer way to do it. Yeah. So yeah, like I said, I'd be loving a move to 42 that exhibited some bullish divergences, and then I'd be unwinding some of my puts, and then we get the next leg higher at some point on the next catalyst, whatever that may be. So for me, I'm kind of fingers crossed we're actually not going to just rally straight back from here, but that's because I've got bullets to do stuff, right? I've got puts to take profit on, and I'm potentially going to add some exposure through some sort of form. Yeah. So that's kind of my game plan. Ethereum, I mean, that just blew through all the supports, right? So, I mean, technically it's a bit of a tougher one given what it's done. But, I had, let me see if I've got my latest, where had I drawn the levels? Yeah, so there was some levels that I had marked out. But, it's not clear. I mean, there's some pretty decent levels down here at 13 and 12, 20 that should hold. But this thing's a beast, right? I mean, this thing is capable of doing anything. It's proven that, right? So, I mean, if Kraken can trade down at 700, then I don't know what to think of this. So that in theory, these are levels that should be respected. But like I say, I'd love to, if we saw that move down in Bitcoin towards 42, then, easily Ethereum gets down here. And then if we get some bullish divergences around that 12 to 1300 range, then it's a nice point to add. But like I say, when markets are moving this fast, rather than trying to catch the falling knife and then get buried basically because you got too big too quick, I'd much rather see some consolidation and see that price chop around, not get involved with the chop, and then and then get kind of more comfortable that the consolidation is over, right? So I'm not quite there yet. For me, the price action is still a little bit loopy and a little bit volatile, that I'm not sure we've seen the lows of this correction. We may have done, but I don't have particularly strong conviction, which is why I'm quite happy to leave my puts on that I've got right now. Yeah. And then the last chart I always like to kind of keep an eye on is the spread between ETH and Bitcoin. I mean, that's just obviously had a crazy move down. Again, kind of hard to really say where there's any support, right? I mean, it's just fallen through the floor. It touched back to 0.03, right? So when it broke 0.04, that was a big long-term resistance level. If we zone out, so put it on a daily, and you know, that was a big level. It looked like it took it out. It briefly popped its head up to 0.046, but now it's all the way back, you know, firmly down in the low levels. Arguably, I'd expect it to find support around 0.028. So if it got there, then maybe sort of favoring Ethereum over Bitcoin might make sense. But right now it's in kind of no man's land. And Ethereum seems to be a little bit more distressed than Bitcoin does, if you look at the price action and just how violent it is on liquidation, right? So I'm kind of not really doing a lot there. Like I said, I've got my Ethereum exposure, comfortable with it. It's unhedged, but you know, I'm planning to keep it for the long term. But right now, I haven't done any tactical ads in terms of Ethereum. Like I say, if Ethereum gets down to that 0.028 level in the spread, I might then put some calls or call spreads or something bullish on as a tactical play to play a catch up if that spread bounces. But for now, I'm kind of not doing a lot in that, right? And I don't have any short vol. Like I was short vol in Ethereum via put spreads and calls, and I closed all of that. Touch wood. I closed the calls on that move down yesterday, but the put spreads I closed out either before the weekend or over the weekend, basically. So that was a bit of a lucky timing, I guess. But when you sell a put spread for $100 and you can buy it back for 25, then buy it back for 25, right? Like, as in you've made 3/4 of the money. Like, what are you waiting for? Yeah, and it was still March, right? So it still had a month to go till expiry. So you kind of, what you're doing, you in 3 weeks or whatever, you've made 75% of the money, and you're going to wait a month to make the last 25%. That's not decent trading, in my opinion, right? So I would always close that stuff out early doors if I got the chance. Yeah. So vol analytics. So one interesting thing I did actually spot. So this is something I look at. It's like what activity is there in the market? What are people doing in this move? So the activity page of this is showing me that the top traded instruments in the last 24 hours are the March 64 calls. That's like the highest volume there, right? And then if you go to March, you can see that that's buyers of calls, basically, right? So buyers of calls is the biggest flow that we're seeing today, okay? And then if I share this screen, which I took a snapshot of yesterday, what flows were going on yesterday. So here we've got the February, the 5th of March, and the 26th of March. So the biggest trades that were going on in Bitcoin yesterday in options was 64 area calls getting sold, but they were also getting bought at the same time in March. So people rolling out of their 64 calls in February to buy March. But look, they were buying the 64s in March and they were selling like the 75, 80 area. So it's actually rolling out of Feb calls into March call spreads. That was where there was some big flow. And then also these 5th of March puts, like these 3,600 puts, they got bought in a chunk, basically, right? So that just shows you, I mean, you know, it's not like it gives you an immediate answer to where we're going, but it just shows you what the biggest option players in the market are doing in options on that day, right? It just kind of gives you a bit of a read, basically, right? So that's what happened there. In terms of what impact it had to volatility, we can have a quick look. Where is it? Google Chrome. So if we go to the volatility page, you can see obviously vol exploded a bit, right? So across all maturities, you can see here 7-day went from 100 to 140. 30-day vol went from lows on the 21st, so that was at the weekend, lows of like 100, gone up to about 125. So pretty violent move up in vol basically, but it makes sense, right? When you're dropping 20% in a day, what do you think implied vol is going to do, right? It's not going to go down. Yeah. So and you have to expect there's going to be a bit more chop where this market tries to find an equilibrium. So realized volatility is likely to stay elevated, right? So that's what the market's kind of repriced. If you look at the slightly longer dated part of the curve, obviously still up, but a bit more muted reaction. Vol got kind of as low as sort of 87, 88, and it's popped to about 100. So obviously that's what you'd expect, right? You expect the front to pop a lot more than the back. So the 6-month vol not as high. So just something to be aware of, right? And so that's what's happening in Bitcoin. Ethereum's kind of similar story, right? In terms of, like I said, the calls were getting sold before this move, right? So it's almost like the skew was telling you that the risk is now moving towards the downside, right? So if we look at the skew, see if that's actually moved. Last month. So what the skew has done. So in general, I think the skew for the 30-day, at least, hasn't that? It's kind of been in a really fairly tight range, right? So the skew hasn't really changed in this latest crash. And that's probably because people who had started buying puts and selling calls to position for the correction have on the correction have started to monetize those. So that bid for puts kind of happened. And now as we come down, people don't necessarily chase the puts anymore and they just kind of let some puts go, or there's not a need to buy them because the puts have already repriced and already reflected the risk of a correction basically, right? So you see that the skew hasn't needed to explode. Now, if we were to break 42, then I think it'd be a different ball game, right? If we broke 42 to the downside, then I think the puts would reprice even higher because the market would get very concerned, right? So that's something to keep an eye on. And that is about it. Any questions?